record on this computer. All right, all right. For everyone who doesn't know me, I am Sheen Trades, a co-founder of TraderLink, and today's class will be a deep dive into gamma exposure. So let me pull up my outline for the day or for this class, and we'll get started. So to start this off, for those who have been and watched the videos and have been in the other classes from the month of December, this is going to be a repetition. I firmly believe, and everyone knows this, is like the more you learn about the same thing, the easier it gets to spot. So practice makes close to perfect. So with that being said, without everything else, let's get started. So to start this class off, we're going to be talking about the gamma curve. Obviously, a lot of people know what that is if they've watched the classes, but we're going to go over it one more time because that's where the importance lies of understanding the sheer basic. Basically, gamma curve. What is the gamma curve? The gamma curve essentially talks about and shows where gamma exposure has the most effect, right? So now let's draw a little graph here. This will be gamma, G-A-M-M-A. The bottom part will just be the strikes. Got it. Okay, let me make sure I have all the right information pulled up so that we don't get it confused. Okay, so the gamma curve looks like this essentially. It'll drop off like, actually, that's really ugly now that I take a look at it. Doesn't go like that, but here we go. Looks more like this. Yes, the bell curve, the original bell curve. Okay, so let's pretend like we have a strike here. And obviously that is the peak of the bell curve, right? So getting into it, where does essentially gamma have the most effect? It has the most effect at the peak here, and this is considered at the money. So with that being said, at the money strikes wherever you are, depending on where the spot price is, right, will always have the most effect in terms of gamma. Anything on this side, let's pretend this way is going in the money, ITM. And then this way is out the money, so OTM, right? So with that being said, the wings of the bell curve, which is out the money and in the money, they will have a lesser gamma effect. And that, with that being said, as I said, at the money is always going to have the most effect towards gamma. And it's very different from Vana, right? And we'll go over that again next week. Maybe we'll open that one up to the public again because that's essentially how we spotted the top today. But gamma will essentially always have the strongest effect at the money. So that's why you see some strikes like this per se is going to be of interest, this 47.10, 47.20, 47.30. Once you get to those points, that's where you want to see the reaction. We call those the AOIs or area of interest. And the reason why they're considered area of interest is because those are the areas in which when market reaches, a reaction from market dealers will occur. For questions in the chat, I will address them at the end. We'll always, me, I always have a Q&A towards the end of class. But as of right now, I just want to get through all the information. And for those who don't know, what's it called? In chat, Liquidos is going to be the go-to in terms of like whatever he's saying is going to he's an admin, so he knows what he's talking about. So if there's any questions and Liquidos can answer, that'd be fantastic, especially if it's the simpler ones while I'm talking through this. So let me continue forward. But with that being said, the reason that I want to explain this is because it tells you that you should be playing reactions of the gamma levels rather than, okay, treating them as a magnet. And obviously, as it goes, this shows exactly why gamma is not always a magnet. As you can tell, the wings aren't going to have a big effect, so gamma is not going to be pulling it towards that way. So that's where Vana comes in, but that's essentially, once again, we'll get into that on the next class, but this explains exactly why you kind of want to wait for a reaction at said gamma levels. So that's the gamma curve. So getting into the next one. So for those who don't know, we did talk about in the basics class essentially what positive and negative gamma exposure means. But now in this class, more specifically, we're going to get into the data portion of how to read it properly. this is how I was taught. This is what I learned. So I'm just going to show you that and we'll get right into it. So, and then at the end after this, we'll get into an example of what happened today, which is perfect in my opinion. So looking at this, right, what is going to be a positive bar? And then actually we can just go through today's example. That was picture perfect of what I was talking about. So if you don't follow my Twitter, I post analysis throughout the day there. So feel free to follow. If you don't, who gives a shit? But I do post analysis on there throughout the day, just things to watch out for. But continuing forward, I posted this tweet at 8 o'clock. I just want to, let's see, find that really quick. Or not 8 o'clock, 9 o'clock. This one. This one to me was an important one. So I said 4710 positive exposure is acting like support. Below that is all negative exposure. You should see some fluid movement if we can get below that. So the sheer basics of or the understanding of positive exposure is that positive exposure more often than not will act like resistance or support. While negative exposure acts more like accelerants or yeah, accelerants. That's the best word for it. Accelerants for fluid movement, essentially. So getting into the positive one right here, we had 4710. I'm going to enlarge this picture. So we have 4710, 4720, 4730, right? So if we mark 4720, as I was saying earlier, right? Positive exposure will act like resistance. And as you can tell, we had resistance here, support or resistance, sorry, let me clarify. But right here, you can tell 4720 was acting like a wall. And then when we finally broke above it, we came right back down. But the thing is when I posted that tweet, we were right at 4710. As I said, you want to wait till you get and approach those GEX levels. The reason is, as I said earlier, with the gamma curve itself, that's when you'll have some sort of market reaction. So with that being said, 4710, I even had it here, last positive wall below spot, line in the sand below is all negative exposure. All of this negative exposure inherently, as I said, will act like fluid movement, right? It'll accelerate through those areas in which we can push down to. And as you can tell, you have 4,700 here that's negative, as well as 4685. And we got really close to it. We didn't hit 4685, we hit 4688. But continuing forward from this moment, you guys kind of, does this make sense so far when I'm talking about positive, can act like support or resistance? So I pride myself on teaching stuff that I use personally, and more specifically in the sense of stuff that will be easily implemented into trading, right? You know, GEX, Vana exposure and Charm exposure, they're all can be very, very difficult to learn, but there are certain ways that you can implement it right away. And that's as simple as just marking the AOIs or the big exposure walls, labeling them as positive or negative, and going from there. That's essentially how you utilize it. But this is a perfect example. This is like a picture, a little bit too picture perfect in terms of an example, which is kind of cool. You often don't see that, but we'll get into situations of negative. So I personally love trading in negative exposure environments. Why? Because it's more directional, more volatility as well. So we talked about yesterday how positive environments suggest higher liquidity, lower volatility, dealers buying playing against price action. So they're buying the dips and selling the rips versus negative exposure where dealers are playing with price action. Then essentially you get higher volatility, less liquidity within the market. So continuing forward with that, you guys understand this whole example as of right now, right? I just want to make sure because this is important. It's very basic. It's perfect. No one understands it. Okay, then let's go over that one more time. So I'll re-explain it one more time, and then you guys can come back and watch the recording. But so what I did was mark this 4710 level, right? Because as I said earlier, positive exposure will act like support and resistance, right? So as you can tell with this chart, it is a positive bar. So I mark it, and everything else below it is negative, meaning all the negative exposure will act like an accelerant. So long as we get below 47.10, we should push down lower, just based off of the data. What's the timestamp on the GEX chart? It's 9:09. It's the same time I posted the tweet. No, you're good. But yeah, so continuing forward, that's essentially the sheer basic. So mark the positive exposure levels as support and resistance. And if we get above or below, then essentially you'll get into different situations. So let's talk about it. So let's say you have a actually, let's do this. Just a random line here. Let's say you have a positive exposure at 46.70, right? So positive DEX above spot. So with positive GEX above spot, what happens? Let's say our approach is coming from below, right? Since it's, as I said, it's positive above spot. Where is the path tool? Here we go. So let's say we're right here. What happens with positive GEX above spot? It will act like resistance and it will flip and turn to support if you break above it, right? Because keep in mind, one thing to take note of is that market dealers are not the same as market makers. They are a subset essentially. They're not within the same, they're within the same realm per se. Sometimes they are the same. You're right, but as I said, they're like a subset of market makers. They're not exactly the same, so they're not always playing with each other. But they can be. But understanding that is number one. So if you have positive GEX above spot, what happens is it will act like resistance, right? So essentially, we get to that level, we reject, and we chop around. But once you get above a positive GEX wall, when you come down and retest it, it should act like supports, meaning dealers will be playing, what do you call it, against the price action. So as you come up here, you're approaching it, right? Dealers are playing against the price action, and the price action is obviously pushing up, and then it comes back down. So dealers are selling as you get towards that wall. But let's say now you get above that wall, right? And you retest that wall at, in this example at 47.70. This positive GEX wall will act like support and dealers will buy with it. And then it'll bounce up, right? It'll be treated as support. So this is what a positive GEX wall can look like in terms of when you get above it, it will act like support. And this is vice versa. So even if you're going from above or below now, so positive GEX below spot, right? It's the same situation. Below spot. I already hit that one. Okay. So it's a similar situation. Let's say you're coming down from here and you're approaching it, it should bounce and chop around this area, right? Until you finally break below, right? And then retest it, this will act now like resistance, right? And with that being said, look, this is the example of what positive GEX looks like. So continuing forward now, let's get into negative GEX. And there's a really cool thing about negative GEX when it comes to it being an accelerant. And we talk about this, I talked about this in the December class, and it's just a cool thing to see. And it helps you understand how market essentially is moving or why it's moving in that habit or in that way. So let's get into negative exposure, negative GEX wall, negative GEX. There we go. So think about it like this. As I said earlier, right? GEX negative exposure will act like accelerants for fluid movement. So with that being said, what happens here? So let's say we're chopping around, we're making our way towards this, and we finally get below, right? We get below. And then you know how a lot of times we see these so-called V-shaped recoveries where basically we get below and we fucking just send it back up. This plays a big role in that, on top of certain other things like Bana, but this is just another thing that helps with the movement. As we talked about, let's say now we've gotten below that negative GEX as an accelerant, but market makers and institutions are finding support, right? We make our way up and then we start pushing up. And what happens? As I said, negative GEX is going to be an accelerant. So we will push right through this and play with the price action, right? And that's when you get those big time recoveries, right? Because they're playing with the price action. They're selling the dips and buying the rips. But once that hedging requirement stops, and it's just market makers left making the taking position, right? And you start bringing it back up. Dealers will come in when you approach that negative Gex wall and push the price action up with it. And that's when you get those big V-shaped recoveries like that on negative days. And this is where all that, this is why I like trading on negative exposure, is because it's a lot more volatile, whether it's in one direction or not. The moves are more directional. Is that making sense, guys? This is like one of my favorite setups to trade. Perfect. Making sense. Making sense. Okay. Is that why once we get from negative to positive AM 4710? Yes, exactly. It was the thing is with 4710 is that it was a positive wall, right? So if we go over that 4710 situation, what happens is so let's relabel this 4710 positive. Yes, right. So as I was saying earlier, right, with this positive Gex, what happens is we came all the way through it and 4710 chopped around, right? We can all go back and look at the price action and chopped around. But what happens? Once we got below, we retested it and then we went lower. So we got above it and we came back down below it and it acted like support for a good amount of time. But then what happens is when we broke under, it acted like resistance. And we can go back and look right at that price action. It's the same thing. 4710. We came up, we came down, acted as support for a little bit. We blew right through it. Dealers bought it back up and came through again, right? But then as we started pushing back up, 4710 started acting like resistance. And then guess what happened? We went lower again. Yes, so you have to take into account price action too. This isn't to say that like it's going to happen every time, but you have to gauge the price action for yourself, okay? It's it doesn't happen every time. I don't want to give you guys false information in the sense like, oh, every time you see a negative wall and we push down right through it and when as we approach it, we're going to push back up. But that's not always the case, but majority of the time that's how it works. Um sorry, I'm reading up and catching up with chat. Yeah, negative Gex more often than not won't flip to support and resistance the same way positive does. After we went below 4710 was the floor, or wait, sorry. What am I reading? So many new messages. Balance the rubber band, as you mentioned, formula before spot on the ball. So it's a little bit difficult. That was based off the old theory. That was a theory that Gio and I created back then. It managed to work majority of the time. That's why I used it. It was because it was working, but it's once again, it's a theory. That's something that I basically came up with. It wasn't exactly how it worked, but that's the old video. That's a much more difficult way to utilize it, and this is a simpler way where you can just implement it right away going into the next day. But yeah, this is I hope this makes sense. This is basically like this is one of the coolest things about negative exposure, which is why I like trading it so often, is because the moves are so volatile. And it moves very, very nicely in comparison to positive exposure. Got it. How would you spot the bottom with all the negative? You kind of just play like my big thing is like it's not always about spotting the bottom. It's kind of just taking into account like what you're okay taking profit with. No matter what, every trader is going to leave something on the table. And that's just how it works, right? That's the double-edged sword of trading. It's always in a lot of that plays a psychological role. It's kind of just like it's a double-edged sword. Even when you win, you get upset because the shit runs even more. Even when you lose, you're obviously going to be upset. That's just how it's shitty to say. And all my friends always ask me like, should I get into trading? I was like, yeah, if you want to be depressed as hell. He's like, why? I see you winning a lot. I was like, yeah, but every single time I win, that shit runs even more. Like today, I took like a 20% play, right? And I was happy with it. But then I go back and look at the end of the day, that shit's up fucking like 500%. That's just how shit works with trading. And it's just being okay and understanding, what you made is always going to be good. Yeah, never get if you get lucky, celebrate. If not, everything that you, yeah, embrace the paper hands. Shit happens. Like but the big thing, obviously this is supposed to be a Gex deep dive, but a lot of people seem like they want to understand a little bit more psychology as well. For me personally, I'm more of a short-term trader, like scalper per se. I can hold very long. I can hold red trades very long because everything like psychologically, everything that I've made so far is profit. So I don't really give a shit if I lose it at this rate. But that's my psychological aspect. I'll hold losers till they're absolutely gone to zero. When it comes to winners, I always take profit early because I'm always securing profit early. And why is every time I hold for more, a lot of the times it goes wrong. It goes against me and the greed kicks in. So I stick with leaving a runner. Trust me, I left the runner on those last 5 contracts for SPX. Couldn't even hold on to them that long. They were down. Like I held those contracts at an average of 3.84. I held them all the way down to 0.55, and I sold majority of them at 4.5 for 20% when they came up. Right. But even when I sold those at 20%, that was the top at the time. That was the top at the time. Um, those contracts went back down they hit a high of 4.6. I sold at 4.5 and they came all the way back down to like 1.2. And my runners basically made me red for the day until they came up again and I sold them at 3.9. So I took freaking $6 a contract on runners. Ah, that's a good one. So, while we're here, may as well just make this a big mumbo jumbo thing of basically how this top was called. That gets into Vana. May as well spoil it a little bit. Why not? If I spoil it now, there's going to be no public class then. But Vana, guys, this shit is powerful. It is one of the best things ever. Um, in my opinion. I love Vana. I used to not use it, and then I figured out more and more of how to read it properly and how the Vana curve works. It's pretty crazy. And it's the same thing, it goes back to this tweet here. So let's get rid of this one. So what did I say here? I tweeted at let's find this one. This one right here. So I said watch for VIX here. Delta on the 4710 just hit minus 0.2, right? This goes back to exactly the same situation of the Vana curve, right? We talk about the gamma curve, but let's talk about the Vana curve. What is the Vana curve? And why is it so important? And why do I say 0.2 delta, right? Because how the Vana curve works essentially is like this. It has 2 peaks, right? And the peaks of right here, let's try like that. Okay. The peaks that are right here are when the delta of the contracts hit 0.2. And it's the same thing here. They hit 0.2, right? And this is at the money. So at the money, Vana has no effect. Vana's greatest effect is when the delta of the strike is at 0.2. So what did I call out? I said specifically here, other side is other side is 0.8 for on the same contract per se. So if you're looking at 47, so if you're looking at the 4710 strike, if you look at the calls and they're deep in the money, the delta should be 0.8 and the delta of the put side should be 0.2, or negative 0.2 technically, because puts carry negative delta. But with that being said, I opened this up and I was looking, I was like, okay, I saw that this bar at 4710 was huge, right? Let's enlarge this photo, right? This bar at 4710 right here, spot price, as you can tell, is 47.24. So right around the same area, 47.24, basically the very top of the day. So with that being said, I opened up the options chain. I viewed the 4710 put. And I said, okay, these deltas finally hit 0.2. So that means this Vana is going to take effect. And I said, push up in vol should pull back, push up in vol should pull this back down, in my opinion. So that's the side I was leaning on. And I'll get into exactly what else I was watching. If vol continues to drop, then this will enact dealers to continue to buy up or continue buying up, right? So what did I see on volatility? We'll keep this open here. We'll open up VIX, and then we will go to a 5-minute chart. What did I see on VIX for the day, right? I noticed, right, let's mark the same time frame. This is 8:20. So at 8:20, where was VIX? It was right here, at the bottom, right around the same time. So let's mark that with a horizontal line. I mean vertical line. This is 8:20, right? So for those who don't know my trading style, I like to use fibs a lot. Fibs and volume profile outside of gamma exposure, Vana exposure, and whatnot. Those are the other things. So what did I see? I saw that Vana was pushing up and pushed up, and so we marked the fib. And we were right at the long golden ratios for fibs. So I was like, okay, this seems like a play. If Vana is going to, I mean, not sorry, if VIX is going to push up, this is the place to push up. So if vol is going per se, if vol is going to pick up here, then this is the spot to pick up, right? And it just so happened to be the top of the day as well. So that's why I said push up and vol, we should push up and vol should pull this back down. Meaning if VIX pushes up, volatility is going to go up, right? Meaning that Vaughn effect is going to start happening and pulling it back down. Does that make sense? Nice. I'm glad it's making sense. But that's the best part about Vana. Vana is the absolute GOAT when it comes to telling about certain times when the effects are going to pick up. Exactly. So vol went back up, and as you can tell with VIX, vol fucking skyrocketed, right? And market pulled right down with it. Right here, market pulled down with it. So that's the telltale sign. Then we got to the 47.10 positive exposure, and everything else below it is negative. So then that's when the next tweet came, and I was like, look, if we can get below 47.10, all we have is negative exposure under it. And guess what happens, as you just learned today? Negative exposure acts like accelerant. So right when we get below 47.10, it should have relatively fluid movement going down, right? Bada bing, bada boom. Bada bing, 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 boom. You guys feel me on that? Jaw feel? Yeah, that's the banger for today in terms of like breaking down how the market moved today with the data. Because a lot of people see my tweets, but then they have no idea what it means. But now you can break it down. So when I start posting this stuff on Twitter and you guys are seeing this and reading this or reading whatever I'm posting, then you'll be like, okay, I know what this guy is thinking. I know what this man is thinking. Who is this person, LH? Where did I initially learn all this? I learned the very basics from Geo. Um, So for those who don't know, obviously, since this is a public posted on Twitter, I guess for the Zoom link, obviously for those who do know and are the OGs, Gio and I started what's called Apex Capital back in 2021. Nothing came about until November or December of 2022 was when we initially released Gamma Exposure, Vana Exposure, and whatnot. But then later on in May, Hassan and Mitchell noticed our data, and they had been trying to build a data platform alongside with Tape. And we had the dashboard already up in terms of the concept. So from then we merged to become TraderLink. Yeah, Vana will always amplify the effect. So it's interesting. I mean, my position, like I said, I'll let that shit go to zero. I'll write it down to the end of day until the contract comes to where I want it to. I size everything for zero, guys. That's my style. That's how I go with it. Yeah, I let those ride I'll hold the red position all the way to zero. I could really care less. How much vol increase should we test? Or does it mean we just need to get the direction of vol as we don't know? Yeah, so that's the thing is like you need to I like watching VIX. Another accurate way to tell is like you could take I showed this in the previous video. You could take a spreadsheet and put like timestamps of what the lowest point in volatility is during the day. So like every 15 minutes you can mark vol and see if it's decreasing. But the there's a sorry, what was I about to say? Shit, I just lost my train of thought. Oh, the standard iteration of volatility intraday, right? Let's go through that because that's always important. No matter what, in the beginning at open, vol is going to be the absolute highest during the day, unless there is a data event or speaker, right? But the basics of volatility intraday is that at the open, you're going to have the highest volatility. Then an hour and a half later to an hour and a half to 2 hours later, volatility will die off. It will start picking up again. It'll slowly bleed off and it'll start picking up again around that 10 o'clock time, 9:30, 10 o'clock. After it bleeds, it'll start picking up. Then you have power hour where it will definitely pick up. So then that's the basics of volatility. So it'll go like this. It starts off high, it starts bleeding off a little bit lower, then starts creeping back up slowly. Then power hour, it picks back up, right? So that's the basic iteration of volatility, and understanding that at certain times volatility may be lower and it won't pick up until X time. Yeah, this meeting is this. It'll be. Did I record it? Yeah, I did. God, scared the shit out of me. But sorry, Sarah, I can't let you speak on because then if I let you speak and someone else wants to speak, then I'm forced to be like, hey, you can speak too. Yeah, I don't want to give everyone else the opportunity to speak. That's the problem is I don't know. We've had Zoom bombers before, like our master class. Luckily, it was in the beginning before class started, but it wasn't recorded. And even if it was recorded, we just cut it out. But someone posted we're sharing screen, taking over the whiteboard and everything. So I gotta maintain the security. Is the at the money strike that hit 0.2? No, I was watching the 47.10, right? So going back to that image, shit, there it is. This image. The at the money strike wasn't at 410. So actually we can draw directly on it. It was like this. This is the at the money strike, right? And then this is where it kind of picks up. So the delta at this strike, the 47.10 was at 0.2. And that's what I was watching for. I was like, okay, the big Vaughn exposure bar was there. Yeah, I'll post you guys, if you haven't watched the classes from December, you should definitely go and watch those. Like those are just as fantastic as this one. They go over the same exact shit. Um, yeah, the TraderLink YouTube has every single class recorded from the past. So that's it's the banger. But yeah, there's not much more else to fuck me. Oh, I choked on a Zin. Um, but can you drop the YouTube URL? Yeah, I can send the YouTube URL. Let me find it. Got it. YouTube URL sent. Can you add on Discord, please? And I don't add people on Discord, sorry. Are you talking about so you mainly use Vana for VIX only? I use VIX to watch volatility. I use Vana to determine which level or when which strike essentially I should be watching to see when the deltas are at 0.2 or 0.8. What did the Vana chart? This is the Vana chart at the time. 90 or 819. That one called the top. 819. This is 820 right here. Also for those who don't know, I watched the 2-minute chart. No, it's not the delta. It's the the amount of Vana exposure at the strike. I can't add on MySpace. I don't have a MySpace. Are you a Discord mod? Who's a Discord mod? The only Discord mod here, I believe, is Liquidos. Uh, do you buy if AOI goes to 0.8 delta on the other side too? Did I understand? No, no, no. AOI is the Vaughn exposure chart doesn't have we don't label that the AOI. The AOI is only for the Gex chart. I can't give image permission. Sorry. I would, but once again, it's for security purposes. You can send them to me on Instagram because I know you all I know Sarah sends me stuff on Instagram, so you can send over those and I can answer it from other people sending stuff. Because if I allow one person to send it, it allows everyone else in the chat too. My Instagram and Trader, or sorry, my Instagram and Twitter are both Sheen Trades. Who is this Leon person spamming stuff? How do I kick him out? Gotta find his name. Yeah, I'm gonna kick Leon out. Sorry, man. That's okay. That guy's out of here. I don't know who that is. Dude, so wild. You get shit like that all the time. All right, no more, no more. Leon is kicked. Leon is kicked. Are you able to share the options chart to show about the 4710 put? So basically how I look at it, I'm a mobile trader. I trade on my phone, in terms of execution, more often than not. All you have to do is click SPX, go to the options chain. I would share my phone screen, but I can't. And then instead of tapping to buy, you know how on when you're on TOS and you tap to buy, you basically just tap it. But what you can do is you hold that 4710 like ask or any of the contracts. You just hover over the ask and press and hold, and basically it'll tell you the delta of the contracts. Yeah, instead of tapping it to buy, just hold it down. It'll show you the quote details. And then you can view the delta. That's how I do it. There's probably a better way, but that's how I do it. So I trade on my phone. So guys, let's cool it on the language. Can we do it on Webull? You should be able to. I'd assume that any sort of thing with the options chain, you should be able to view the delta of the contract. In regards to Vana, the option delta has to be 0.2, whereas the other side of things is like when you view something that's super in the money. So in this case, we're at the 4710, right? So we're super far out of the money, right? We're not super far, but 47 when in relation to spot price, we're out of the money. So I viewed the 4710 put. Right. If I look at the call, then it'll be very in the money and it'll have a positive delta. I occasionally look at that yellow line, but that's a lot of that requires me to write down the number or remember the number in which what lowest vol was to see if we're constantly increasing or decreasing. I was literally when did you enter? I didn't take 4710s. I was in 4700s and I just held them throughout the entire day. Other than at the end before the drop. I got out like I want to say on this candle, probably right here before it pumped back up and then sent it down. Because I was building a desk and I put my limit at slightly above break even on my runners. But yeah. Will you do a future class on footprint charts? Yeah, I can do a future class, but there's only one specific thing I watch on the footprint chart, and that's what's it called? The delta divergences. That's it. It's not a big one. There's not much else I can really teach about the footprint chart because the only thing I watch for is like the delta divergences. So something like this, right? Where you have a candle like the or yeah. So delta divergence is essentially when you see a green candle like this, obviously a lot of people think um semi-bullish, right? Depending on how it formed. But you can have green candles that look like this, where you have a wick here and a huge body, right? However, when it comes to the delta of the candle itself, it can be negative. Say it's negative 5,000, right? Minus 5,000. What does that mean? When you have a negative delta on a green candle, it means that even though this candle looks bullish from the outside, when you break it down and see the delta of the candle itself, there were actually more sellers. It was a negative delta. So even on a giant green candle like this, there were more sellers. So a perfect situation is like this, right? These are both green candles because we only populate the delta when it's the opposite of whatever the color is. So in this case, we have a negative delta on a green candle, another negative delta on a green candle, fall down. Because there were, guess what? On those two green candles, there were actually more sellers. So that's the telltale sign to watch out for. So yeah, that's pretty much the only thing I watch on footprint. Pretty quickly explained. You size for zero, but have you ever swung any contracts? And if you have, what was your justification given the exposure data? I swung contracts. Okay, so usually I don't swing almost ever, but oddly enough, the first trade of the year was a swing, and that was like I said, I trade off of Gex exposure, Vaughn exposure, Charm exposure, footprint, as well as volume profile and fibs. That was a volume profile and fib play for my swings. No, the meeting does not cost money. The meeting is free. How do you call the bottom? How do you call the bottom that perfectly? Just timing, right? It just so happens to be like when I was watching it, we were in a perfect area for VIX or vol to go back up. So, and the delta finally hit 0.2. So it's not every time it's going to be, I'm calling the top or the bottom. That doesn't happen pretty much all that often. Don't get me wrong, right? But just so happens at that time, we were in the long for fibs and for vol on VIX. So I figured if there was a time for VIX or vol to push up, it would be now. And it just so happens that the delta of the 4710 puts were also at 0.2. So meaning that Vaughn effect is going to happen. So depending on what it was, okay, I guess to break it down step by step was, okay, look at Vaughn exposure, see that strike. Is that strike's delta at 0.2? If it's not at 0.2, then the effect isn't going to happen as what's the word I'm thinking of? As effectively, I guess. The effect isn't as effective if the delta isn't at 0.2, but it just so happens the delta was at 0.2, negative 0.2 to be exact. And then VIX was also in the long fib, meaning that if there was going to be a place for VIX to bounce, it would be right there. So meaning vol would essentially have to push up if it's going to push up at that moment from that point on. So yeah. Can we get a positive GEX? Can we go back to positive GEX today? We had 4710, 4720, 4730. Therefore, all these areas can be interest, support, resistances. What are differences in days with more areas of interest versus less? More area of interest usually means choppier action. And as you can tell, this is relatively interesting chop in the beginning. We had to get above. The reason I don't like trading with positive exposure is because it's not, think about it like this. When you have positive exposure, it's going to obviously act like resistance, right? So but it's not a sure shot that it's going to act like resistance because we can obviously break above it. If I were to play positive exposure, I would play the retest of that break, right? So it was like, okay, if we broke above 4710, then I would enter, right? Or I wouldn't enter, sorry. I would wait until we get a retest of some sort, right? And I watched the 2-minute chart. So looking at this, 47.10, right? Positive exposure. We got a slight retest right here on this candle. We broke above it, we retested it, and we continued moving forward. So if I were to take a trade, it would have been right here. Well, keep in mind, this is also very hindsight, right? I'm just telling you, this just so happens to be a perfect example of retesting and pushing up, right? So it's not going to happen every time, which is why I don't like trading positive exposure as much, because it's less of there's more things that can go against you in comparison to going short or long through negative exposure. Do we have to buy both? Yes, the meeting is free. You guys have no, I don't use supply and demand zones. Can I clarify when the delta of the strike price, so 47.10 put, right? We're up here. I want to check what the delta of the 47.10 strikes are. So for swing trade, how would you interpret gamma levels on the aggregate chart? Are the levels more stable compared to ODTE gamma? Hope that makes sense. As of right now, we don't have aggregate data, but we will have it on the V3 release. V3 release is planned for next Friday. Anything to consider from the red and green horizontal lines channels? Anything to consider from the red and green horizontal line / candles on a single 5-minute candle of the footprint chart? I personally don't bother looking at that. I'm not inherently the right person to ask. And I don't want to give false information. That's a big one. I just don't want to give incorrect information. So I strictly just watch the delta of the candles, if I'm being honest. Could you go into looking at future dates, either end of week? Is there any value in seeing where dealers are positioned for future dates? Of course there is. There's a lot of value in seeing what the future expectations are in terms of end of week. However, I like to watch mostly OPEX instead of end of week stuff. Most of that end of week stuff is going to play out on it. It's very difficult in terms of how it plays out and reading how it plays out, to be more exact. If there's no Yeah, you can. I just mostly watch OPEX to see what they're planning and seeing how they're positioned for OPEX. That's the biggest one for me. Yeah, that 47.10 Vana was the key component for today. Yeah, the delta was at 0.2 when we were at highs today. Thank you, Liquidos. I actually took the retest break and retest. Yeah, it's super good. I mean, if you've watched the videos, you already know, like I've taught this over and over and over again. So understanding like the break, how positive exposure versus negative exposure acts is a big part of how to understand price action a little bit more, right? Because you always see people talk about like before data became a more used thing, you always had people talk about breaks of levels and retests, but this essentially it's very similar. However, it's a little bit more, you get a deeper understanding of what is happening, right? It means, as I said, market dealers and market institution or market makers are not always going to be in the same boat. So market dealers are going to play against the price action in that positive environment. It'll be uploaded right after it finishes processing. I'm very quick with uploading these classes. I do look at positive GEX some like today, right? It's like below 47.10, then we can see a flush. It's the same thing, or it's the same concept of like I if I can see negative GEX below certain levels, fantastic. Then I know that we should accelerate through that area. Um, I I don't know if I'm able to do a free trial as of right now, but I can yeah, there are 1 week trials available for 29.99 or 29 bucks, I forget. When price accelerates through negative exposure, what GEX signs are there for when acceleration stops? I want to say less pickups, like less negative exposure below. So even like today, this is something that, doesn't happen very often, don't get me wrong. So it's like it just so happened to line up perfectly. So that's why I'm using it as an example because it lined up very well. So something like this where it's like per se, this wasn't here. So these sections right here, right, these bigger exposures, let's say they didn't exist, and it's just very light negative exposure below. Then it's kind of like, okay, then the movement isn't going to be as strong. Yeah, perfect. Thank you, Patty. It's exactly as I said. Who is Nexus? I'm gonna kick Nexus out if I'm being honest. If you keep talking to people like that, bro. I don't stand for any disrespect. Sorry, reading chat right now. Let's see. Yeah, of course. I do these classes for our members. I'm committing to basically doing this more often. Like I've been in December before I left for vacation, I streamed every other day. Where I streamed on the days I didn't teach class. So like I usually teach class Thursdays and Fridays or third sorry, fuck. Tuesdays and Thursdays. I teach classes and then I'll stream for members Monday, Wednesday, Friday. Yeah, so VIX Fibs, I it's just high to low. Relative high to relative low. So I drew them from, let's clear this. Um, this to up here, this high. I also got a new mouse and it's very sensitive, and even after I changed the DPI, super annoying. But yeah, I also I'm trying my best to post on Twitter more often because I feel like I don't know, it's kind of cool being able to see like into my mind real time if I'm not live streaming. But yeah, I post on Twitter every day. Try. What does the last candle in the footprint chart near 1255 denote? Here net gamma is positive. Does it mean there are more buyers or sellers? The delta on this one is very, very positive. So it's very interesting to see that there were a lot of buyers at the end of the day, even on a red candle. Yeah, it's just when we have a divergence. I mean, I can ask to put total delta, but it just makes it harder to recognize the divergence candles. I mean, it's a lot more work to recognize them. Didn't you mention that the first 2 week is where? Yeah, so there's windows of weakness. Where did I put it? I've been typing in the announcements channel a little too much every single time. But I have uh, this right here. Actually, I'm realizing copy image. There's an easier way to do this. I just paste it on here. Boom. Make it large. I made this after this class in December, actually. Sarah, I'm gonna have to kick you out if you keep spamming. Please don't spam. Can you explain that flow like this? Yeah, so okay, so the first week of the okay, so the main importance of this is Sarah, if you do that one more time, I will kick you without hesitation. Please stop spamming. All right. Guys, please stop. Okay, Sarah's kicked out. Next one is Nexus. So sick and tired of this. Okay, they're both gone. It's ridiculous, dude. Can't do something good. Cannot stand that garbage, bro. I have the cheat sheet for where is this? Oh, I need one. Gotta find it. I'm scrolling right. Okay, apparently it's not here. Yeah, I'm gonna make Liquid a fucking co-host next time, so you just ban all the shitheads, dude. Honestly, super annoying. It's like you try to do something good and open it to the public, and this shit happens. Can you show ES on the beta footprint? So as of right now, our footprint doesn't apply to ES. We don't have futures data. If we did, we have everything set up for once our data provider gives us futures data, then I can send that out. I'm actually gonna stop the recording because everything else is like me shooting the shit with everybody.